Well, I think the key word, Mike, there that you used was should have expected. And I think the key was the Fed pivot, where it rejected the characterization of inflation as being transitory, and I think that changed the tenor of markets, or at least should have. So as you know, I've been expecting this for a little while, and last time I was on, I think I called a local low, not because I was generally constructive on the markets. I still think it's a sell the rally market, but the fact of the matter is the Fed is going to have to act. If you look at the Taylor rule, the Fed is way behind on hikes, and I think that's why Mr. Bullard came out today and said he favors 1% by July, keeping in mind that he's been sort of in the hawkish lead for some time. He was the first person to suggest 50 basis points. So I think this is a sell the rally kind of market, and I think the Fed is going to have to act. And the only thing that will stop the Fed from acting, Mike, is if the equity markets and other risk asset markets do some of the tightening for it.
It may well be true, and clearly the Fed has plenty of work ahead of it in terms of normalizing, catching up, withdrawing stimulus, and all the rest. But do the markets have that much farther to go? I think that's the question. When you have the two-year note yield, 155, the two-year note yield basically added a full hike today, implied into its yield, and yet the equity market has been kind of in this, apprehensive way, correcting but not breaking down. I mean, do we take anything from that, or do stocks not get it?
Well, interestingly enough, the small cap stocks have actually corrected quite a bit, and I think at that low we're down something like 25%, and they've been underperforming really since May of last year, as I've been pointing out on a regular basis on this show. The S&P really isn't down all that much from its all-time high. I do think the 10-year could get to 2.25 to 250, and if you recall, when the 10-year got to 3.25, that's really when the market in 2018 took the next leg down. And I think it's a very similar market to 2018 relative to the tightening that's going on vis-a-vis the Fed. But, Mike, I think the biggest difference here is, and it's something that none of us have seen in a while, is that the inflation is here. And that's another big differentiator from the period you were just talking about with your previous guest, which was when the tightening occurred in the late 90s and early 2000s. It wasn't accompanied by inflation. Big difference in my view.
Peter, we were just talking to, you're referring to our most recent guest, and Mark Mahaney, who's an internet analyst, typically a bullish one, and yet, he's saying that his coverage universe is not investable for the next 3-6 months or so. And I'm wondering if you share the same view, if in this market environment, it is really a losing game to be in tech, particularly the high multiple tech, when you've got rising inflation and rising rates.
Yeah, I think that's a really important consideration. And my caution really, again, started with small caps for a while, because I thought they were going to have trouble passing through costs to customers, because they typically have less pricing power than large caps, and certainly less pricing power than tech. So I think really that's the repricing that needs to happen. And if I look at the S&P 500, even after the recent correction, a price as a multiple of revenues is still something like 3 times. And that is historically well above where it was in 2000, for example. So I'm not sure the markets, the equity markets, and in particular tech, has priced in the higher rate environment, especially considering that they're, as people like to say, longer duration, where the terminal values on those cash flow models determine much more of their value, perhaps, than cyclical manufacturing companies, for example.
So just to underscore that point, Peter, you're saying that there's more downside in tech. Tech has not come to grips with a higher rate environment.
Not yet. I don't think it has.
Peter, great to get your thoughts. Thank you.